Good afternoon and welcome to the fourth NTT UK Sanctions Compliance Forum. It's almost exactly a year ago since we ran our first event, and it's been heartening to see an increased interest at each successive forum, be that in person or virtual. As a team, our background was in the provision of central services to the London market. And we were used to interacting with participants through user and working groups, service governance boards and market events. We saw the value in information sharing and collaboration. It's our aim through these forums to build on those positives and create a community of common interest in sanctions compliance. I hope this afternoon's agenda will prove interesting and informative. Can we have the next slide, please? And then the agenda slide, please. First up, we have Tony Boyle from Brighter Consultancy. He will be covering getting sanctions right in practice and giving you a flavour of what's involved should a regulator come knocking or coming to investigate. After that, we have Chris Pobar, Head of Sanctions at Lloyds, to give us a view from the centre. Chris has kindly supported all of our events to date. And finally, we have Dominic Susek, CEO of Global Radar, our technology provider, to cover how AI is integral to sanctions screening. Please, as we go through the presentations, put any questions that occur to you in the chat, and we will attempt to answer them in the concluding Q&A session. Over to you, Tony.
Thanks, Anthony. From one Anthony to another, although I'm glad you used Tony in my case. And yeah, thanks very much for giving me the opportunity to speak. It's really great to be here at our first time, Brighter's first time at one of these events. So I'm a financial crime consultant with the Brighter Consultancy Group, and I just want to spend the first minute or so explaining who we are and where our expertise lies. So if we can just go to the next slide, please, actually. Thank you. So Brighter were formed back in 2018, and over the last 6 years, we've built up a pretty strong track record of delivering high impact, outcome-led and lasting solutions to our clients. As the right-hand side of this slide says, we operate across a number of different industries, but really our core grounding and I guess the foundation of which we were formed lies in financial crime, and specifically client screening and remediation. So yeah, over the last 6 years, we've successfully delivered several financial crime programs to various clients in recent years, from remediation to transformation and across quite a broad range of deliverables. But really our key expertise, and this is the topic of my little slot here today, is aiding clients in getting things right in practice. And what I mean by that is we offer practical solutions to help firms effectively manage the challenges they face in remaining compliant, safeguarding against financial crime, whilst also remaining as effective as possible operationally. So what I'm going to go into a bit more detail on in the context of sanction screening is what those lasting solutions are, why they're so important, and why it's so important to implement them and implement them well. And for anyone keeping count, I think that's 2 or 3 times I've used the term lasting solutions, so hopefully that point is landed. So if we can move to the next slide, please. So getting sanction screening right in practice. So I don't need to explain the importance of having reliable and robust technology, and there's others who will be speaking, particularly Dominic, who can articulate that far better than I can. But having the right technology in isolation is not enough, especially if it's not able to integrate into a holistic AML process, an AML process with the right controls, appropriate risk frameworks, and the relevant skills and expertise to apply them. And it's that wider process and the importance of that wraparound of the technology that I'm going to touch on in this slide. So we've picked out 4 elements which we think are absolutely key to getting sanction screening right in practice. Now, clearly this isn't an exhaustive list, but getting these 4 pillars right and working alongside the right technology will go a long way towards effective sanction screening and getting sanction screening right in practice. So first up, taking a risk-based approach. Now this might sound plainly obvious, but one of the biggest challenges you will face is deciding on the correct risk thresholds. And no two firms will be the same when setting sanctions risk appetite due to the various and many different external and internal factors that you'll need to consider. And it's a bit of a misconception that zero tolerance eliminates that need to develop a risk appetite for sanctions compliance. And whilst it's true that zero compliance clearly means there's no appetite to violate sanctions, sanctions themselves are so limited and so nuanced. So for example, if a client of yours might have an office in, let's say, Russia that contributes up to 5 or 10% of their global group revenue, in that situation, you need to decide whether you're comfortable with these indirect sanction risks, and if so, what proportion of revenue would be acceptable. And there's a careful balance that you need to strike between the desire to limit risk whilst continuing to ensure a functioning operation in being able to drive those efficiencies. So for example, and clearly if the threshold for escalation is too low, without proper consideration for operational and resourcing needs, then your sanctions team will be clearly inundated with work, and time-sensitive and important transactions might not occur. And on the flip side, if the threshold's too high, then you might proceed with transactions which are way beyond risk appetite and ultimately put the firm at risk. So defining a clear and robust sanctions risk appetite will help you stay ahead of the game and really allow you to target those resources where they need to be targeted. So kind of moving down to data management. Now, this really rings true to a phrase I used earlier, in that even the best technology isn't enough if you don't already have that wraparound to ensure it's working as best it can. So it's absolutely vital that customer data is accurate and up to date, and it's worth investing time upfront to cleanse and properly prepare that data. Inaccurate or even incomplete data will result in false positives. And if you're screening hundreds of thousands, maybe even millions of customers daily, this can quickly become a real problem operationally. And just slipping through the net. Sanctions risks need to be at the front of mind and interlinked into other processes. So clearly at the onboarding stage, or when a customer takes out a new product, or if their regular transactional behaviour changes, you need to ensure you have accurate customer data, including those secondary identifiers like addresses, nationalities, occupations, to be sure you're screening. And also knowing at what point in another process should trigger a review and should trigger you to say, we need updated customer information. So for example, that example I used of irregular transactional behaviours, that should trigger you immediately of the thought of, we need KYC on this customer, we need up-to-date information. And that kind of takes me nicely on to the third point here of policies and procedures. So starting with policies, firms need clear and robust policies that define their approach to sanction screening and are aligned to that risk-based approach that I've already spoken about. And policies need to outline the scope of screening activities and really clearly articulate the frequency of screening and the criteria for escalating potential matches for further review. Now, potential matches should be urgently addressed, but your sanctions team needs a really well understood and crystal clear escalation process. And your policies need to define, when an escalation occurs, what are senior management's responsibilities for sanctions compliance. And procedures then need to operationalise those policies and really give you comfort that the people carrying out the investigating and escalation of screening outputs are well versed on how to apply them and apply them properly. To simply put, in terms of procedures, this is detailed and step-by-step instructions and parameters for the investigation of a potential match, discounting false positives, or escalating a potential or indeed a true match. And without those clearly documented procedures that are constantly reviewed and refreshed as policies or risks thresholds evolve, the risk of a breach or breaches will significantly increase. And then finally on this slide, and I guess on the topic of breaches and errors, to QA and continuous improvement, and the need and the benefits of QA in two ways here. So firstly, human error is inevitable. It's an inevitable part of any process, and you'll implement QA checks in multiple processes to reduce the likelihood of these errors. But the risk and implications of human errors are far greater in sanction screening than in most other process, maybe more than any other process. So it's so important to have and implement a robust QA and 4i check process as part of your wider function. And that additional layer of scrutiny is needed to mitigate those risks, errors, oversight. I think I already touched on, in the context of data management, how screening hundreds of thousands, and I think I maybe even said millions, of customers every single day can quickly become a real problem operationally if you don't have the right data. Well, imagine a firm processing thousands of transactions each day, and the risk of inadvertently processing a transaction involving a sanctioned individual or a sanctioned entity due to those inevitable human errors without having a proper QA and 4i check process in place. And assurance sampling thresholds need to be weighted properly towards areas that pose more of a risk. So whether that's based around customer risk thresholds clearly, or of course internal staffing risks. So for example, you're going to check a higher sample of work for someone that's new to your operation than, say, a long-in serving member of staff, and you're going to apply a higher sample to someone who's performing the process poorly or has some knowledge or training gaps versus someone who is quite high performing. And it's so important to document and articulate those thresholds within the QA or dual control process to aid that continuous improvement. And staying on continuous improvement, just to wrap up, that kind of takes me on to the second benefit of QA and how QA shouldn't be viewed or applied really as just a safety net for catching errors. So QA and constantly needs to be fed into senior management, thinking about procedural changes that are required or knowledge and training gaps within the operation and any current or emerging risks. And QA really is the best and most efficient way to develop and enhance those processes and ensure your screening activities remain compliant, but also are as effective as possible operationally. And good QA that's properly carried out can guide a team and guide an individual's training needs and identify where those errors are occurring or are most likely to occur and really aid that continuous improvement within a screening function. So just to wrap up on this slide, you're maybe thinking that this sounds very, very obvious, and it maybe is, but you'd be surprised at how many firms fall short in one or more of these areas in the context of sanctions risk. So if you're sitting and have any single bit of doubt, you might have a gap within one of these areas, then it's great having really robust technology to support and conduct your screening. But no matter how great the technology is, it will always need a mixture of human talent and additional reliable and process-oriented controls working alongside it. So I'm just conscious of time. I'm probably almost at the end of my slot here, but if we can quickly move on to the next slide, please. Thank you. So yeah, as I touched on at the start, Brighter Consultancy are well versed and have a strong track record in implementing these best practices to work alongside existing technology. And I just wanted to very quickly highlight a case study from a recent engagement we had with a client who are a UK-based global payments provider. So unfortunately, they got themselves in quite a bit of a pickle and were subject to an FCA S166 skilled person review and were mandated to cease due to weaknesses found in their AML controls and processes. This is a pretty, but on the previous slide is where they were falling. They were engaged to run an end-to-end remediation project, which actually incorporated the the wider financial crime processes, including CDD, EDD, transaction monitoring, and SARS. But in the context of sanction screening, this particular client had quite a viable system to screen their customers against sanctions lists, but they didn't have that wraparound that I've been talking about, and so ultimately the risk exposure was quite high. So I'm not going to run through every single word on here in detail, but ultimately I'll skip to the end. We came in and implemented all of those additional controls and processes that I've been talking about, which allowed the business to satisfy the FCA's concerns, and we got them into a good place again, and they were able to eventually return to business as usual. But we implemented them not just for the purpose of the remediation and the S166 review, but so that they were lasting solutions. There's that phrase again. So they became best practice within the business long after we were gone. So like I say, I'm a wee bit conscious of time, so I won't go into all the detail here, but if you do have time after the webinar, and if you think or have even the slightest doubt that you might have a risk to the point I made earlier, please, I invite you to go and have a look on our website. There's some really good information there, financial crime blogs and other client case studies that hopefully might give you, might help you and might give you some good insights. So I'll wrap up there. Thank you for listening to my dulcet tones, and I think I'm handing over to Chris, who's up next.
Can you hear me? Great, thanks, Tony. Good afternoon, everybody. Next slide, please. Thank you to Anthony and NTT for allowing me some time to just share insights and observations from Lloyd's. So for the next 10 minutes, I'm just going to cover Russia in terms of the latest designations by the US and the UK, touch on the maritime challenges that sector poses for sanctions practitioners, and then just to highlight a few important areas and risks for delegating authorities within the market. So next slide, please, Jennifer. Thank you. So last week, both the UK, the US and G7 partners implemented additional sanctions against Russia. On the US side, over 300 new designations were released, and these are targeted at Russia's military ability to sustain the war against the Ukraine. And one of the most prominent parts was the secondary sanctions risks to FFIs. So these are essentially banks. We saw with Russia back in 2014 and Crimea in terms of sectoral sanctions and making credit and other loans available to Russian FIs, but these are now very broad and targeting non-Russian FIs located in China, Hong Kong, India, Kyrgyzstan, and even Turkey. So all the FIs that are funding, supporting, making the trade available to Russia from third countries of key military equipment are now being targeted and subject to those secondary US sanctions. So a big step to prevent that illicit trafficking of controlled goods. And also the US broadened the definition of Russia's military industrial base. So you'll have service companies, other services that are producing components in third countries that end up in all the drones and weapons that Russia is using against Ukraine. So big expansion that will need compliance teams to really have the controls really effectively tuned, because what may have been a permissible insured prior to June may now be caught because of certain services, products or goods that could be defined as supporting Russia's war machine. And also on the US side, the insurers have been targeted in Russia. So SOGAZ and the Russian National Reinsurance Company have been designated. In all probability, the market had already de-risked back in 2022, but you could still have legacy transactions on treaty basis that are probably worth keeping an eye on. And then the US also further targeted the LNG sector of Russia. So LNG 1 and 3, all the construction, manufacturing, the completion of vessels, so all that will be subject to sanctions. So insurers and brokers should really be acutely aware of those risks, especially on the EAR and energy projects that may have a long-term policy period. So it's worth looking at the exposures there. Next slide, please. Moving just slightly away from Russia, Iran has been playing its part in the Red Sea with all the crisis in Palestine. So last week, the US designated vessels, entities, and other even captains of certain vessels supporting the Houthis and their military targeting in the Red Sea. So these facilitators are now going to be, have been designated. So again, for brokers and insurers, it is worth really keeping an eye on all the marine, hull, cargo, liability, and war risk covers, because they may have exposure to the activity in the Red Sea. And even the last few days, I think 2 vessels have been hit and one is sinking or taking on water. So the Red Sea continues to be a big issue for mariners. And I think the pricing is, again, under scrutiny in terms of the war breach course or vessels, heading north or south towards the Red Sea and into the Suez Canal. Next slide, please. Thank you. From a UK perspective, again, Russia was targeted last week. In alignment with the US, this included 50 new designations, and the focus continues to be on the maritime sector. So the so-called shadow parallel fleet, the Russian FIs that are providing the funding, and again, entities are spread around the old Soviet bloc, but also China and Turkey feature on the list. And not surprisingly, the DPRK, North Korea, is supplying certain goods to Russia as well. So, maritime is not going away. And I think we've seen a lot of news and articles on the dark fleet, the parallel fleet, in relation to the Russian oil price cap. So that growth is a big challenge for the marine sector. And then Ingolstadt, this would have been the traditional Russian insurer ensuring sanctioned business in Russia that the Western G7 insurers could not provide cover for. So again, the squeeze on the insurance sector is a big impact, but hopefully the market would have de-risked back in 2022 onwards to extract themselves from any exposure to Ingolstadt. Next slide, please. So maritime insurance, this remains a big headache and challenge for regulators and governments. The ability of Russia, Venezuela, DPRK, Iran to flout UN regulations, sanctions, price caps, control dual-use goods, it's all been facilitated by the maritime trade. And on a single voyage, we have, from the market's perspective, hull interests, cargo interests, war, and also the liability under the P&I clubs. So you have quite a number of actors involved in a single voyage that has to play their part to prevent that illicit voyage happening, which is a big challenge, given the geopolitics with China and others, port authorities. flag registries, even the UN conventions themselves are under scrutiny and stress. So the debate will carry on, but governments are still trying to see what can legally be constructed to prevent maritime, abuse of that sector. So we are in constant dialogue with regulators still on this topic, so that hasn't gone away, and that's going to carry on for quite some time. So last slide, please. I just wanted to draw your attention to delegation of authorities and outsourcing of key functions in underwriting claims, etc. There's enormous risk in outsourcing without the appropriate oversight and controls. Delegation is popular. It's still growing. In the Lloyd's market, 35% of the business is through cover holders. So all the outsourcing to cover holders, MGAs, TPAs, and the delegated claim authorities, it poses enormous risk, not just in underwriting, but in collecting premium and paying claims. So a risk-based oversight needs to be really running well here, because we are seeing a number of potential violations and weaknesses in the cover holder model. So compliance teams should really be using a very risk-based approach in screening how they are expecting their high-risk cover holders or their high-risk binders to be conducting that delegation of authority. Audits need to be very deep and focused, in particular for the high class, such as marine, because we are seeing quite a number of issues cropping up. And this was really brought home in December last year when OFAC enforced against Pure, that related to an oligarch through a Panama entity. So, without that screening that is effective, you are literally allowing risk to crystallize, which will then be picked up by OFAC through a disclosure or other means, and then civil penalties will be the result. So just a reminder to the market on outsourcing, on delegation, please make sure you are really, really tight on the high risk binders and cover holders, because risks are appearing. And just one final point to mention, social engineering, payment diversion of claims, we are seeing a rise in that again. And generally the weakest link in the chain, be it the broker, adjuster, cover holder, TPA, even the solicitors and accountants are being targeted. So the compromise is happening in the weakest link. So just ensure your TOBAs are correctly worded in terms of risk transfer or not, and make sure the resilience of your vendors and agents are very robust to prevent this. So on that note, I'm going to pause and hand over to Dominic.
Thank you, Chris. I'm going to assume that everyone can hear me. So Kaylee, if there's any issues, let me know. Can you go ahead? Actually, I have no slides to speak of, so I'm just going to be speaking. So I'll go ahead and start. I would like to thank Darren, Anthony, as well as NTT for allowing me to participate in this presentation. I've had the good fortune of working with these good people for some time now, and it's been a pleasure. Looking forward to continued collaboration. As I was preparing for this presentation, I was thinking about what is AI. We all have heard that term, it's used a lot. And so really I was trying to condense into a small sentence, and this is what I came up with. It's simply an attempt to automate and accelerate human decisioning, removing all emotional aspects that may corrupt a logical outcome. And so that's sort of what I'm going to be speaking about today. But before we begin, I'd like to just give a little bit of background on myself. I started working in the banking industry in 1986, before wide area networks or desktop computers existed. I cut my teeth in Miami, the epicenter of money laundering in the 80s. Miami was ground zero for all money laundering, and led to the origin and foundation of money laundering regulations, and were subsequently supplemented with terrorism regulations following the 2001 events in the U.S. I mention this because I mentioned my background because it played a crucial role in defining my professional career and to shape the company, the technology, and the staff that I run today. The first step in understanding the differences between machine learning and artificial intelligence, a common term that's used in the industry is artificial intelligence, but there's really two elements of the process. There's artificial intelligence and machine learning. Machine learning and artificial intelligence is one of the most transformative technologies of our time. And the difference are artificial intelligence refers to the simulation of human intelligence in machines that are programmed to think and learn like humans. It encompasses a wide range of technologies and applications, from basic rules-based systems to complex neural networks that mimic the human brain. While machine learning is a subset of AI that enables machines to learn from data and improve their performance over time without being explicitly programmed. It's about creating algorithms and algorithms on top of algorithms that can recognize patterns and make decisions based on data. Machine learning has revolutionized industries across the board. The healthcare industry, as an example, AI helps in diagnosing diseases, personalized treatment plans, and even predicting patient outcomes. In the finance industry, machine learning has played a powerful role in fraud detection, stock market predictions, customer risk assessments, and KYC processes for banking. In transportation, autonomous vehicles use AI to perceive environment and make decisions real time. In the retail environment, the customer experience through personalized recommendations is improved. There are three types of machine learning that we're going to be speaking about today. The first is supervised learning, which includes algorithms that are learned from labeled data to predict outcomes, such as classifying emails as spam or not spam. Then there's unsupervised learning, which is essentially algorithms learned from unlabeled data to find hidden patterns, like grouping customers based on their buying behavior or identifying sanctioned parties through name analysis and historical patterns of clearing. And that's something that we're going to talk about more as we continue with this presentation. And then there's the reinforced learning, which is algorithms learn through trial and error, receiving feedback in the form of rewards or penalties, such as teaching a robot to navigate a maze. While the potential of AI is vast, it also presents some challenges. AI systems can perpetuate biases present in the data that they are trained on, leading to unfair outcomes. As AI systems collect and analyze vast amounts of personal data, concerns about privacy and data security become an important factor. And of course, the last but not least is there's ethical use. There are ongoing debates about the ethical implications of AI, such as its impact on employment and decision-making autonomy. AI in the insurance space has played an important role. AI significantly impacted the insurance industry by transforming traditional processes and enhancing operational efficiencies. Underwriting and risk assessments are an example of some of the impacts. AI algorithms have been used in vast amounts of data to assess risks more accurately and faster than traditional methods. This leads to more precise pricing of policies in some cases and improved underwriting decisions. There's claims processing. AI automates claims processing through natural language processing and image recognition, speeding up evolution and settlement process while reducing fraud. Customer service, chatbots, we've all had experience with them, powered by AI for 24/7 support, answering queries, processing policy changes, and offering personalized recommendations. There's fraud detection, and AI has been used to detect fraud activities by analyzing patterns of claims data, transaction histories, and customer behavior, reducing financial losses to insurers. AI also enables insurers to personalize policies and services based on individual customer data references and behaviors, improving customer satisfaction and retention. Then, of course, there's last but not least the operational efficiencies, which is something we strive for. AI-driven automation streamlines internal processes such as policy administration, risk management, and compliance, sanction screening, leading to cost savings and faster decision-making. And that's the crux of our presentation today, providing clarity on the sanction screening and the cost savings involved. AI is revolutionizing the insurance sector by optimizing operations, enhancing the customer experience, and mitigating risks, which is the primary discussion of this presentation. The role of artificial intelligence in the reinsurance industry is also very important. Reinsurance plays a critical role in the insurance ecosystem by transferring portions of the risk, of course, to primary insurers, as you all know. The key uses of AI in the reinsurance space, including the risk assessment and underwriting. Algorithms analyze vast data sets, and that's a critical data point. The analysis of vast data sets, including historical claims data, weather patterns, economic indicators, and more to assess the risks and more accurately and efficiently. Catastrophe modeling. AI-powered models simulate and predict the impact of natural disasters and catastrophic events. Claims management. AI streamlines claim processing by automating routine tasks such as data entry, document verification, and fraud detection. And then, of course, portfolio management and optimization. AI has been used and driven analytics to provide insights into portfolio performance, helping insurers optimize their risk exposure and diversify their portfolios effectively. Then, of course, there's customer insights and personalization. AI algorithms analyze customer behavior, patterns, preferences, demographics, and segment markets, and tailor reinsurance solutions to specific client needs. And the benefits of AI in the reinsurance space include enhanced accuracy and efficiency, improving risk assessment accuracy, reducing underwriting time, and enhanced claims processing efficiency. Cost savings, of course, automation of repetitive tasks and predictive analytics leads to cost reductions in operations and claims management. And then there's innovation and competitive advantage. AI has fostered innovation in product development and risk management strategies, positioning reinsurers such as yourselves to the forefront of industry advancements. Leveraging AI and sanctions, enhancing compliance and detection. Artificial intelligence really is revolutionizing the world of sanctions, enhanced compliance efforts, and improving detection capabilities. Sanctions is a crucial tool used by governments and international bodies to enforce foreign policy objectives, restrict trade, and deter illicit activities such as terrorism, drug trafficking, and human trafficking. Global Radar and NTT have worked diligently to create a platform to effectively mitigate the risks associated with identifying individuals and companies that are affected by sanctions. And this is a critical element. The key uses of AI and sanctions include enhanced screening and monitoring. AI-powered algorithms analyze vast amounts of structured and unstructured data to screen individuals, entities, and transactions against sanctions lists and watch lists. Then there's natural language processing, which enables AI to interpret textual data from news, social media, and other sources to identify potential sanctions violations. Then, of course, there's the risk assessment and due diligence. AI conducts risk assessments by analyzing historical transaction data, customer profiles, behavioral patterns to identify high-risk entities and activities, And machine learning models improve the accuracy of due diligence processes by detecting anomalies and suspicious activities indicative of sanctions evasions. Then, of course, there's transaction monitoring and alerts. AI automates real-time transaction monitoring to detect unusual patterns and suspicious activities that may indicate sanctions violations. Advanced analytics and anomaly detection algorithms generate alerts for further investigation by compliance teams, enhancing proactive risk management, and that's key here. Sanctions compliance and reporting. AI streamlines sanctions compliance by automating regulatory reporting requirements and maintaining audit trails and compliance activity, which are both crucial in the compliance space. Then, of course, there's predictive analytics, which provide insights in emerging regulatory trends and changes, ensuring timely adjustments to compliance strategies. The benefits of AI and sanctions include, of course, improved accuracy and efficiency, cost savings, which is huge, of course, and enhanced compliance culture. I'd like to just speak for a second about the AI algorithms used in enhancing compliance. In sanctions clearing, artificial intelligence plays a crucial role in enhancing the efficiency and accuracy of compliance processes. Here are a few examples of algorithms commonly used. Natural language processing, which I mentioned earlier. Natural language processing algorithms are used to analyze textual data from news articles and social media, as I mentioned. Then there's functionality. By understanding and interpreting human language, NLP helps compliance teams stay updated on potential sanctions violations and emerging risks. Then, of course, there's machine learning for person, vessel, and entity resolution, which is a very instrumental part of our system. The application for machine learning includes developing algorithms are employed to improve entity resolution tasks, such as matching names and identifying aliases or variations of sanctioned entities. These algorithms learn from historical data and patterns to accurately link transactions, individuals, and businesses to sanctioned entities, reducing false positives and enhancing detection capabilities. And this is a crucial aspect of the sanction screening and the utilizing AI for sanction screening. Global Radar has worked tirelessly to improve the machine learning process of our solution on entity and person name matching resolution by utilizing billions of data points that have been accumulated over 17 years. This is the crucial element that differentiates Global Radar from our competitors, because at the end of the day, AI is only as smart as the data that has been gathered and processed within the application. And it goes back to what I originally said about the automation and review of information rapidly. So that's why having 17 years of experience in this field and having billions of records to utilize for powering our AI has been a critical element in ensuring that the AI is as effective as it possibly can be. Here are some other examples of algorithms utilized in AI processes. We, as an example, remove words from a curated list of often used words. These we consider noise words for persons and entities. We search differently if the name is a person or an entity or an identification or a country. We use colloquialisms to add additional versions of names like Mike or Michael or Nick or Nikki. And we give a score to each word to know their weight. And that's a critical point to the AI process for identifying possible matches. Because at the end of the day, the purpose of all of our efforts is to try to reduce the number of false positives. And of course, we use ranking mechanisms using a Soundex as part of an element of the AI process. But at the end of the day, we've gathered information from billions of records that have previously been screened and have used the information that has been used by individuals that have cleared those billions of names in establishing the baseline for the artificial intelligence that is used currently through our system. These algorithms, among others, collectively empower us to enhance sanctions claim processes by improving detection accuracy and reducing operational cost and ensuring adherence to regulatory requirements in a global landscape. And one of the reasons we do this is to ensure that companies have the risks mitigated and that the penalties for non-compliance and that they're not affected by the penalties for non-compliance. Regulatory, as you all know, regulatory bodies can impose hefty fines on organizations that violate sanctions. And this is one of the largest factors that plays a role in attempting to ensure compliance with regulations. The monetary penalties can be huge. And of course, there's the impact on the reputation risk of any companies that have failed in their compliance space. And of course, there's legal consequences. We personally have experiences with some organizations that have been shut down by the regulators for non-compliance. And then, of course, there's the operational disruption and global enforcement. Just to name a few, Standard Chartered Bank in 2019 was fined $1.1 billion for penalties to settle allegations by the US and UK authorities. The bank was accused of violating sanctions by processing transactions for customers in sanctioned countries such as Iran and Syria. UniCredit Bank was fined $1.3 billion. The bank was accused of processing transactions involving countries subject to US sanctions, such as Iran. Deutsche Bank in 2020 was fined $583 million by the US and the UK regulators for failing to maintain an effective money laundering program. And HSBC, of course, was fined $192 million in penalties to settle charges for processing transactions that violated US sanctions. In conclusion, I'll just add that machine learning and AI are reshaping our world in profound ways, from healthcare to finance to insurance. AI is revolutionizing the reinsurance industry by enabling more informed decision-making, improving operational efficiency, and driving innovation in risk management. As technology continues to evolve, harnessing AI capabilities will be crucial for reinsurers to navigate complex challenges and seize opportunities in the rapidly changing global landscape. AI is transforming sanctions compliance by leveraging advanced algorithms and data analytics to enhance detection capabilities, to improve decision-making and mitigate the risks of sanctions violations. As regulatory complexities evolve, harnessing AI technologies will be crucial for organizations to navigate compliance challenges effectively, to uphold the global regulatory compliance requirements. Financial penalties associated with non-compliance can be hefty, as I've mentioned. Maintaining robust sanctions programs and staying abreast of regulatory updates are crucial for organizations to mitigate risks and uphold ethical business practices. And so I hope that I've been instrumental in providing you with some insight into AI and how we utilize AI to create a platform to really facilitate the risk mitigation for companies throughout the world. And so I thank you for your time today, and I'll turn it back over to Anthony at this point. Thank you, Anthony.
Hi there. Thanks very much. Thanks all to all our presenters. I'm just going to see if some questions have come through, and I believe they have. I've just got to flick onto another screen, so I'm not looking at you directly. It's because I'm trying to read these questions. But I think we have a question for Tony. Just bear with me. Tony, how long was the payment firm suspended for? And how long did it take the suspension to be lifted? And was there an estimate of lost revenue for that period to that organisation? So actually 3 questions there, or at least 2 anyway. Any thoughts on that, Tony?
Yeah, I'm just giving a wee delay. Hopefully the live's caught up. So the payments firm were unable to trade for 12 months in total. in about 6 months prior to Brighter being engaged. So it took us about 6 months to get us back into, or get the firm back in the good books of the FCA. I'm not sure off the top of my head and what that equated to in terms of loss of revenue, but they had, I think it was about 130 million euros or pounds, sorry, of customer funds tied up. And it obviously caused a real problem, and there was real reputational damage with all those customers' funds being tied up in that time and being unable to release them back to the customers. But unfortunately, I'm not sure on what that equated to in terms of loss of revenue. So yeah, hopefully that helps as much as
Yeah, it does. Sorry, I was just waiting for it to flip back to me. So thank you. Let me see. I think I've got another question actually. So this one, oh, they seem to be very evenly distributed. Maybe it's because it's in the sequence of the presentations. A question for you, Chris. How can firms effectively implement sectorial sanctions into their screening programs? Any thoughts on that?
Thanks, Anthony. This is very tricky because on the SSIs, there's, I think Directive 1 to 4, mainly related at the FI and energy sector. So the usual suspects, Gazprom, Bank, others are going to crop up on the screening systems. And like a typical sanctions and compliance practitioner, everything is case and fact specific. So you're going to have to really look at the transaction that's being flagged to really understand what services is the insurer or broker providing to that Russian insured or counterparty, and then try and discount that. So yes, you are going to get a lot of noise and return and false positives that will have to be cleared just to remove that SSI risk.
Thank you. Right. Right. Okay. I've got another question for you, Chris, that's come in. I'll let Dominic actually respond to one that's come in before, but you do have another question, Chris, after this. But for Dominic, does your technology continue to learn and become more effective from the ongoing false positive classifications? And is the benefit of this ongoing knowledge shared across customers?
The answer is yes, because, for example, we bring on new clients year after year, and we've, as I mentioned in my presentation, cleared billions of records that have been accumulated over the years, and the information of clearing names and the knowledge that our AI system is accumulating is captured from data from across all of our customers, so that all of them can benefit from the technology and the use of the AI. And that's a critical element, because the AI is not a siloed environment that's developed for each individual client. The capabilities and the strengths of the system continues to evolve with every new client that's brought on board, and that's shared, and all clients benefit from that.
Thank you. Thanks very much. Thanks, Dominic. Yeah, I think we've just got one more question for Chris, and then I think we'll have to wrap up. Actually, let me just check. There's probably there's two. Yes, here we are. When you, it was a question for Chris. When you spoke about outsourcing and sanctions, we don't always have the full details of the parties in the binders. Any advice on how we can manage this risk from the sanctions perspective? And the asker is speaking from the perspective as an insurance broker, not the underwriter. Am I giving you enough detail to answer that?
Thanks, Anthony. I saw the question in the chat box, so
good.
all good. Thank you. I think with a broker being closer to the risk, there is a higher expectation on the broker through its proximity to the binder and the cover holder to have the ability to obtain the required information to screen, or at least have ready access to it. So underwriters could argue they are one step removed, but the broker plays a much more critical role in understanding that underlying data of the insured name, address, date of birth, etc. So my only steer would be if there are high class business lines, marine, property, travel and PA, I think you would need to try and obtain as much underlying data of the insured and policyholders as possible to allow screening, because marine, property and PA are the ones that we readily see where violations have occurred.
Thank you. Well, I think we're going to have to wrap it up there. We're nearly at 4 o'clock, and I know that people will be readying themselves for a certain event that's taking place later on this afternoon. Just wanted to thank all of our presenters today. I want to thank the audience for coming along and at the start being part of this sort of community that we're developing. Just things to look out for. The presentation that's been presented today will be issued, and so it can be watched maybe by colleagues if they find that interesting. The materials will also be shared with you and will be sent through, just so you've got the detail there from Chris and Tony's presentations. Please look out for our September forum. It will be an in-person event. We had a very good one back in February that was well attended. We'll try and make that as central and as close to the city as possible. And apart from that, I think that's a wrap. So thank you very much, and hopefully see you next time. Cheers.